Hi, welcome back to Lipper's Fund Flows Insight. I'm Jeff Turnahoy. For the week ended Wednesday, June 3rd, 2015, the conventional mutual funds industry saw fairly muted flows across most asset classes. Let's start things off with a big picture view of our major asset classes. Starting off at the top here, equity mutual funds had scant outflows, about $900 million. Taxable mutual funds saw inflows of $1.7 billion, fairly light for them. Municipal debt funds continued to see outflows. This week, about $400 million was pulled for them. And last but not least, money market funds. They again had inflows of $8.1 billion. Well, as I said, it was a fairly tepid response to goings on in the market this week. We saw some encouraging data about trade and job creation in the U.S. Yields came up in Germany. All of this led to more speculation that maybe the Fed will raise rates after all this year. That's kind of kept a damper on the market. In fact, let's take a look at equity flows for the week and see what happened here. So we've had 2 weeks of poor performance in the equity markets. Again, with speculation rising that the Fed will raise rates later this year, that's kept a damper on activity. People really like low interest rates and they want it low forever, but eventually that has to end. It didn't help things out either when European Central Bank President Mario Draghi made comments that there is more volatility in the markets and more should stay. So after that, we had outflows in equity funds. So 6 weeks of outflows now. Domestic equity funds continued to suffer the wrath of investors. They saw about $1.8 billion pulled for them, while investors continued to look overseas, non-domestic equity mutual funds. They had inflows of about $968 million this week, again, continuing to outdraw domestic equity funds for quite some time now. Large cap value seemed to be a little more in favor. About $161 million came into their coffers. At the other end of the spectrum, large cap growth saw outflows of about $557 million. Let's take a look now at equity ETFs. They were on the other side of this trade. They had inflows this week of about $7 billion, a rather risk-neutral view, if you ask me, because we saw diversified products like the Russell 2000, which is IWM, as well as SPY, each take in about $2 billion this week. EFA was not too far behind. They took in about $814 million. At the other end, you know, the EFA emerging market, which is EEM, I think I have it misspelled here, they had outflows about $300 million, fairly light. And then we saw sector products for energy as well as core suffer some small outflows. But when we're looking at the big picture here, it really looked like a risk-neutral view in the eyes of equity ETF owners. So we'll see what that means in the coming week. The next group to turn our attention to is taxable mutual funds. Again, they led the week for the long-term products with about $1.7 billion this week among mutual funds. Another poor week in the markets, 46 basis points to the bad side. That didn't inspire too many investors to come out and put money to work. I think investors seem a little stuck, though, with their choices, where equity markets seem to be tottering a little bit. Bonds don't look much better than that, and certainly cash doesn't pay anything. So where's an investor to turn? They kept money at work in taxable bond funds. Core products outdrew everybody else. They took in about $700 million this week. They've been jockeying with Core Plus, so it's very product-driven decisions here. High-yield products were not too far behind. They took in about $570 million. At the other end of the spectrum, general bond funds, which tends to be a very long duration play, they suffered outflows of about $250 million. Loan funds also had outflows about $92 million this week. Not too bad for loan funds considering how much outflows they've had over the last year or so. Well, let's look at their cousins, the taxable fixed income ETF. These guys had outflows of about $464 million. They've had outflows for 4 of the past 6 weeks, so it hasn't looked too promising there anyway. The core product, AGG, was the best of the bunch with $359 million in inflows. Overall, though, when we're taking a look at the pictures, you're going to see some treasury products in both inflows and outflows. One way of looking at it is if we look at the long-term treasury picture, they ended up with net inflows this week of about $104 million. You add up the short-term treasury products, they had outflows of $464 million, so it seemed like investors preferred long-term treasuries over short ones this week, at least in the ETF space. Currency products, they also suffered outflows about $126 million. Next group to take a look at is municipal debt funds. Again, they had outflows this week. I think it's about $375 million. This is their fifth consecutive week of outflows. Investors have been reluctant to do much with municipal debt funds, given how soft the Treasury market has been lately. The municipal market has not held up very well. And again, with more strange business coming out of Puerto Rico, it's difficult to make the case that municipals are a good buy. High yield funds, they ended up with $21 million in net inflows, not too bad on this week. Short and intermediate products, though, led the charge toward the exits. Combined, they had outflows of $246 million. The last group to take a look at is money market funds. Here again, it was hard to tell what investors were doing this week, with net inflows of $8.1 billion after last week's outflows and inflows before that. It's anyone's guess as to if there's any meaning at all, and if there is, please tell us what these numbers mean, because they just seem to be going about their business in a normal pattern. Retail investors subtracting $2.2 billion from their accounts this week. Institutions added $10.3 billion. So really no direction here as we've seen over the last several weeks. Well, that'll wrap it up for this week's analysis of flows. Join us next week, same time, same place, or join us online at lipperusfundflows.com for the latest in flows data. Thanks for watching.